Hi there, good morning and thank you for starting your day with us. You're watching what is this year's last edition of Market Cafe on ET Now with me Snehi Shah, and with me is Shayansi Singh. Shayansi, I'm clearly very excited because it's the last trading day of the year. We've hit record highs across indices yesterday. Benchmarks were at record highs. Nifty has, yet again broken a record high. So let's hope that rally continues even for the last day of the trading year as well. And well, in the next 1 hour or so, we'll take you through all the important global stories that we've been tracking for you, how the global handover is looking like. In the second half of the show, we'll go stock specific, take you through a list of all the stocks that could be potential buzzers in today's trading session, as well as what brokerages are flagging out for us bright and early this morning. So with that, Shreyansi, let's kickstart the show with the handover from the US markets. What's it looking like?
Absolutely. So it's really interesting what is happening in the US markets because stock futures were a little changed, but it's really the backdrop that is taking the spotlight sort of. So now when you look at stock futures, they ended a winning year on a high note, possibly a new milestone in store. The S&P 500 enters the final trading day of this year less than 0.5% from a new record high, which could serve as an exclamation point on a rally that has gained strength in the final months of this year. Now it's the backdrop, like I mentioned, that is very interesting. So the S&P 500 is up 24.6% this year, with the Dow rising about 13.8%. Now when you look at the Nasdaq Composite, that has led the way with a gain of about 44.2% this year, on pace for its biggest annual increase since 2003. And this is yet to change. So let's see how it finally closes. The market rally really has broadened out in the fourth quarter, with the industrial heavy Dow already making a string of record highs this month. The small cap Russell 2000 also is up about 14% this month, on track for its best month since November 2020. Now, when you look at European stocks, you're looking at a sort of lower closing as global markets are still searching for new record highs to close out the year. So when you look at the Pan-European Stock 600 index, provisionally closed down about 0.1%, with healthcare stocks adding 0.6%, while when you look at banks, they dropped 0.5%. And when you look at the continental blue chip index, that was last trading around that 478.21 mark, not far below the index's record closing high that was notched in November 2021. Now, when you're looking at the yield on the 10-year treasury, that also added more than 5 basis points and ended around that 3.8% mark. So that largely is the handover coming in from the international markets.
Well, thanks, Jansi, for taking us through that. Let's also take stock of what's happening in the world of crude, and oil prices have fallen 3% on Thursday as more shipping companies said that they were ready to transit via the Red Sea route, easing concerns about supply disruptions as Middle Eastern tensions continue to stay elevated. Now, the more active Brent crude futures for March delivery were down almost $2.5 or almost 3% at 77.3. Brent futures for February delivery, which expired after yesterday's settlement, fell almost 1.5% to settle at that $78.3 per barrel mark. Now, what's key to note is the Danish shipping company Maersk said it will route almost all container vessels sailing between Asia and Europe through the Suez Canal from now and divert only a handful around Africa's Cape of Good Hope. Now remember, this is the commentary coming in from the second biggest shipping company in the world, and also the biggest shipping company in the world, which is France's CMA CGM, is also increasing the number of vessels traveling through the Suez Canal, it said earlier in the week. Now, major shipping companies stopped using Red Sea routes and the Suez Canal earlier this month after Yemen's Houthi militant group began targeting vessels. So that has reversed now, and the US crude stockpiles fell by 7.1 million barrels in the week ended December 22. This is what the EIA data showed. While analysts polled by Reuters had expected a draw of 2.7 million barrels. Now, investors expect interest rate cuts in Europe and the US in 2024, which could boost oil demand. So, well, as of now, supply is exceeding demand. Let's see if the rate cuts in the future going ahead will boost oil demand. So yeah, well, Shayansi, we'll keep an eye out on that as we go ahead.
Absolutely. And in terms of things that we need to be keeping an eye out as we go forward, you do have some important cues to watch when you're looking at India. You do have the third quarter BOP current account, and as well as November fiscal deficit data coming in. So keep an eye on those data sets. Now, in terms of lock-in period ending, you do have updater services. That counter will remain in focus. And you do have Ugro Capital as well that will remain in the spotlight on account of that board meet to consider a fundraise. Now, Power Grid is of course considering issue of bonds, and that counter will also remain in the spotlight. Now, in terms of other events to keep an eye on, you do have that long-awaited meeting of the finance minister with the heads of PSU banks. So that will definitely be something that will remain in the spotlight as well.
Well, lots of important cues to watch out for, but let's take a look at all the global stories that we've been tracking for you this morning. And the number of Americans filing for unemployment benefits have risen last week, indicating that the labor market continues to cool in the fourth quarter of the year. New unemployment claims have risen by 12,000 to 218,000.
Well, keeping it with the macros then, interest rate on the most common type of home loan in the US has fallen for the 9th straight week. Now, the lending rate is set to close the year at the lowest level since May. The 30-year fixed mortgage rate dipped to 6.61% from 6.67% last week. Remember, the rate has declined each week since hitting the highest level in 22 years in late October.
Well, shifting focus then, Alphabet's Google has agreed to settle a $5 billion lawsuit as it claims to have secretly tracked the internet use of people browsing privately. The terms of settlement remain undisclosed. As per lawyers, the company has agreed to a binding term sheet via mediation. Now, formal court settlement is expected in February next year.
Well, shifting focus then, global smartphone maker Xiaomi forays into the EV market, launches its first ever EV company, claims that the newly launched sedan SU, short for Speed Ultra, has super electric motor, technology that will facilitate speeds faster than Tesla and Porsche EVs.
Well, and moving on, in a landmark event, Ayodhya's Ram Temple inauguration, which is scheduled to take place in January, which is poised to trigger significant economic opportunities as well. The surge in tourism is fueling demand for accommodations, benefiting hotels and resorts. To get further details, let's go across to my colleague Samir Dikshit. Samir, take it away.
Ayodhya, the birthplace of Lord Rama, is going through a transformational phase. With the opening of Grand Temple of Prabhu Shri Ram on 22nd of January, it is expected that the economy of Ayodhya and even the nearby places is likely to boom manifold. And that is the reason that the local businessmen, that the local shop owners, they are very optimistic with this Lord Rama's temple. They expect that devotees, those who will be coming to Ayodhya in lakhs and lakhs of number, they will help to give their businesses and the entire economy a much needed push. Right now we are standing at Rampath. Towards my left and right side you see the local shops, and in addition to this you will also see massive construction which is going on. This entire construction reflects the new Ayodhya. Ayodhya is gearing up for the new phase, for the second chapter, which is termed as Ayodhya 2.0. And you will also see that how the entire city is being beautifully decorated for the 30th December, when a couple of infrastructure projects will be inaugurated by Prime Minister Narendra Modi. But let me tell you that when it comes to the economy side, the Trader Association CAT has suggested that with Prabhu Shri Ram temple getting its inauguration on 22nd of January, the economy is likely to, the business is likely to push by around 50,000 crore. But what's more is expected, we will be talking to some of the local shop owners over here. वीर जी, मैं समझ रहा था यहाँ की अर्थव्यवस्था को, इकोनॉमी को लेकर के आपकी शॉप को समय कितना हुआ, और अब जब 22 जनवरी के बाद क्या बदलेगा?
सर बहुत कुछ बदलेगा सर। देखिए 22 साल हो गए सर, 22 साल पहले सर कुछ नहीं था यहाँ पे सर, एकदम खंडर था, कुछ भी नहीं था। अब तो सर आप देख रहे हैं कितना प्रोग्रेस हो चुका है सर, दुकानें बढ़ गई हैं, रोजगार तो सर इससे वजह से बढ़ेगा ही बढ़ेगा, मंदिर की वजह से सर बहुत सर तरक्की होगी इसमें अयोध्या की। टूरिस्ट 2019 इससे सर टूरिस्ट भी बढ़ रहे हैं, ऐसे रोजगार भी बढ़ेगा ही बढ़ेगा।
2019 में जब सुप्रीम कोर्ट का फैसला आया उसके बाद आपको लगा कि नहीं ये 2019 एक चेंजिंग ईयर होगा, एक गेम चेंजर टाइप का?
बिल्कुल गेम चेंजर है सर जी। 2019 के बाद से जब से फैसला आया है तो यहाँ पर माने दर्शनार्थियों के आगमन बढ़ा है और यहाँ के लोगों के लिए रोजगार की व्यवस्थाएं हो रही हैं।
Cool. The smiling faces speaks a lot because they are very optimistic that the devotees, those who will be coming, they will also be bringing the much needed fund, the much needed economic revival activity for the city. The entire Ayodhya is gearing up for economic revival. Now let me tell you that in terms of figures, many big hotel chains like ITC, Radisson, Taj, they have already committed to build hotels in Ayodhya and nearby vicinity. In addition to this, we have seen that many other required infrastructures will be built up, and this will bring an investment to beyond $7 billion. In addition to this, the airport and also the railway station that is going to be redeveloped and built on the new line will also push the economic revival of Ayodhya city. With this, it is expected that Prabhu Shri Ram Mandir will give completely new face to this grand old city.
Well, thanks Samir for that update. But with that, we're timed out on this segment. We'll see you with more news and updates on the other side.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's take stock of how the Asian markets have opened up this morning. And well, Asia Pacific markets were mostly higher today on the last trading day of 2023, with investors assessing prospects of the electric vehicle companies after China's Xiaomi unveiled its first EV. We spoke about this earlier in the show as well. And well, in the early hours of today morning, Australia's ASX 200 index dipped 0.3%, cooling off from the two straight sessions of gains, now down 0.2%, managing to, slip towards the green, but let's see if it manages to do so. But the interesting thing about ASX 200 is that it was still up 7.7% for the year. And well, let's just focus and talk about China and Hong Kong markets, because they will be closely watched today after Chinese consumer electronics company Xiaomi yesterday detailed plans to enter Chinese oversaturated electric vehicle market. On the back of that, Hang Seng is down 0.2%. Let's also see what Shanghai is doing, and Shanghai is somehow in the green, up 0.2%, very nominally in the green. So let's see if it continues to build those gains. Now, China and Hong Kong indices have rallied more than 2% each in the previous session, but they were still set to be the biggest percentage loser for the year among major Asia Pacific markets. China's CSI 300 index is down 11.8% for the year. Hang Seng on the other side has plunged 13.8% as well in 2023. Shifting focus, let's talk about South Korea's Kospi index. Now that rose 1.6% at open, still at those levels. So let's see if it continues to hold on to the green. And the Kospi has gained 18.7% in 2023. Kosdaq has jumped a whopping 27.5%. Lastly, let's talk about Japan's Nikkei that fell almost 0.2% at open, right there as we speak as well, down 58 points. But what's interesting to note is this index has gained 28.5% so far this year, making it Asia's top performing market. Shifting focus back home, we managed to hit a record high on the Nifty yet again. We closed around the 21,778 level yesterday, implied open at 21,950, quite a solid start. So well, let's see if we managed to hit another record high today and the levels that we scaled on the last day of the trading.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at FirstCry then. And the parent company of the online retailer Brainbee Solutions has filed its draft papers for an IPO. The company is looking to raise about 1,816 crores via fresh issues of shares. My colleague Ashesha is standing by with more details about this new IPO. Ashesha?
Well, yes, FirstCry's parent company could hit the bourse soon. FirstCry's parent company Brainbee Solutions Private Limited has filed its DRHP or draft red herring prospectus with market regulator Sebi. This IPO is expected to be a combination of both OFS as well as fresh issue. In fact, the company is looking to raise over 1,800 crores via fresh issue, and it will also have an OFS component where the offer includes an OFS comprising of nearly 5.4 crore equity shares. Japan's SoftBank, which currently holds over 25% stake in the company, is looking to sell nearly 2 crore shares in FirstCry. Apart from this, Premji Invest will also be selling 8.6 million equity shares, while company CEO Supam Maheshwari is also looking to sell his stake in the company. So yes, a much awaited IPO expected to hit Dalal Street soon.
Well, thanks Ashesha for all of those details. Let's move on then. And Sebi has suggested amendments to the verification of market rumors. The market regulator has proposed that the timeline for verifying market rumors shall be within 24 hours of material price movement. Let's go across to my colleague Ankur, who has more details on this. Ankur, good morning. Take it away.
Yes, market regulator SEBI has suggested few changes in the market verification of rumors. SEBI has said that the definition of materiality of event should change to materiality in terms of price movement. The difference is that earlier, if then an event is material which was defined by the circular, that should be verified by the company. But now, if there is a price movement due to certain news item, due to certain market rumor, that should be verified by the company, that should be responded by the company instead of materiality of event part. Remember, there was an industry standard forum which was comprised of various associations such as ASSOCHAM, CII. All those associations had suggested that these changes should happen to the circular, and hence now SEBI has come out with this proposal. There are also a few suggestions now as far as defining how much price movement is important. So there is a suggestion of benchmarking it to index, that if 1% index is moved, how much materiality should be defined in terms of price movement of that particular stock. Suppose a stock is already higher price, so even though a small percentage move will be higher for that stock, and similarly if a stock price is lower, vice versa will work. So all that mechanism will be incorporated when the final circular comes on verification of market rumors. But all in all, as per earlier proposal, it was supposed to be implemented from 1st of February 2024, and as far as the top 250 firms are concerned, top 250 listed firms are concerned, that was supposed to be applicable from 1st of August 2024. We need to wait and see what suggestions actually industry gives and stakeholders gives to SEBI on these proposals.
Well, thanks, Ankur, for that roundup. But stay with us for now, because the RBI has released its financial stability report as well. According to that particular report, Indian banking system is in a better shape and well capitalized to absorb macroeconomic shocks over a one-year horizon. So what are the key takeaways of the report aside from this as well?
Yes, definitely. In fact, in this report itself, Reserve Bank of India, Shaktikanta Das, has mentioned that over past 4 years, there has been several shocks which has been there in the global economy, and we are coming out of it. He also mentioned about the inflation, that the projection still remains uncertain, and hence a prudent and cautious approach should be applied as far as tackling the inflation part. Apart from that, the report also highlights that Indian banking system remains resilient, and there has been several stress tests which is conducted just to check in under severe stress test scenario what will be the condition of banks as well as NBFCs. If we talk about banks, the GNPAs of the banks under the baseline scenario is likely to improve till September 2024, and that will improve to 3.1% versus 3.2%, which is the current situation as of September 2023. Similarly, under the medium stress test scenario, the GNPAs of the banks are expected to increase to 3.6%, and if you take the severe stress test condition, it will increase to 4.4%. That is the highest parameter of stress test which has been applied to check the asset quality of the banks. Similarly, if you talk about the capital ratios, the CRAR of the banks will not fall below the minimum capital requirement of 9.5% under any stress test condition. And if you talk about the baseline scenario, the CRAR of banks is likely to increase to 14.8% next year. Similarly, it is projected at 13.5% under medium stress test condition and 12.2% under the highest stress test scenario. So all in all, the capital system of banks remained quite robust, and hence there is not much requirement of worrying. But overall, the Reserve Bank of India has mentioned that NBFCs should look for capital, and same direction was given for banks as well earlier.
Well, thanks, Ankur, for briefing down that RBI report for us. But let's shift focus to the Tata Group of companies, because Tata Sons chairman N. Chandrasekaran has said in his address to employees, and he's also highlighted near-term challenges while warning of more disruption and volatility. My colleague Sumit has more details and is joining in on the phone line. Sumit, take it away.
Well, that's the two words, disruption and volatility. He said that the complexity in global governance, it will reach new heights in next year, as the world is finding new rules now to protect data privacy, curbing inflation, and reducing carbon emission. He also spoke about perceptions of AI risk, artificial intelligence, but he said that while near-term global outlook is shadowed with uncertainty, India's future is bright. So short-term, yes, there could be some kind of problem, but long-term, India is perfectly fine to grow, and India's future is bright. He also said that he's thrilled to that in this difficult global context, the group has performed very well in this year currently. So it's a year-end address to employees, and he said that all these commitments of tackling challenges are there, and Tata's transformation is going on. So he spoke about all these issues, but two big, clearly words coming out: disruption and volatility for next year. But in the long term, India's outlook is very bright.
Well, since it's the final trading day of this year, let's also take a look at how this year panned out. Ashesha joins in with this market wrap.
Well, yes, first up, let's talk about how India performed as compared to the rest of the world. India gave a solid return, or rather Nifty 50 gave a solid return of over 19% on a year-to-date basis in dollar terms this year. And Nifty 50 outperformed several emerging markets. In fact, Hong Kong gave negative 16% returns in calendar year 2023. Meanwhile, Nasdaq gave a solid 44% returns in calendar year 2023. Let's also talk about some other asset classes globally. Cryptocurrency has had a solid run this year. Bitcoin, in fact, soared nearly 163% in this calendar year, while gold hit record highs on intra-year basis this year, with gold surging as much as 14% in calendar year 2023. Meanwhile, Brent crude has had a volatile run this year, with a decline of nearly 7% on a year-to-date basis. Let's also talk about other commodities then. Natural gas prices declined as much as 55% this year, while other industrial metals have had a volatile run. Nickel prices declined by as much as 44% this year, with iron ore prices surging as much as 21%. Coffee prices, meanwhile, also saw a surge of nearly 18% this year. Let's also talk about how India performed as compared to the rest of the world and other emerging markets. At a time when Nifty 50 rose by nearly 20%, it has significantly outperformed emerging markets like China and Hong Kong. Meanwhile, we have Nasdaq, Nikkei and DAX, which have given over 20% returns this year on a year-to-date basis. Let's also talk about the kind of flows India has seen this year versus other countries across the globe. India has seen inflows of nearly 20,100 millions this year, much more than several other countries globally. South Korea, meanwhile, saw inflows of nearly $9,800 million, and Taiwan saw inflows of nearly $5,800 million. This shows the kind of resilience India has shown across asset classes and globally as well.
Yeah. Well, thanks Ashesha for all of those details. Let's move on then. And ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Now, Nivesh Day is being celebrated on the 5th of every month. So join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back. Thank you so much for staying tuned in. Well, as we inch closer to the new year, let's also take a look at what the futures and options roundup is looking like. And we have Ansh joining in. Ansh, how are you looking at it right now?
Right, so starting with Nifty first, Nifty touched the 21,800 mark for the first time, and with that we ended the December series yesterday, and with that Nifty registered its biggest single series gain in 34 series, which was up by 8.2%, and it was also the best December in last 10 years in terms of series wise. If we see the December rollover, Nifty gave a rollover of 79.5%, which was slightly above the 3 series average, whereas in Nifty Bank we saw 81% rollover, which is almost at par with the average. Looking at FNO segment, we saw very active call buying at 22,100, indicating traders are very optimistic of Nifty touching 22,000 very easily, whereas on downside we are seeing put writing directly at 21,500, which is like around 250 points below from where currently Nifty is trading. So here we are seeing a huge range, so huge volatility is expected by the option traders. Whereas in Nifty Bank, we are seeing very active call writing at 49,000, psychological mark indicating some resistance around this level. Whereas on downside, we are seeing very active put writing at 48,500, which is around the current level only, showing that this level could provide a good support for today's session. Let's see what happened in FII action in FNO. In index futures, they covered 39,000 long contracts. They also covered 46,000 short contracts. So net to net, we are seeing a net addition of around 7,300 contracts, due to which the total long position has inched higher from 62.6% to 69.5%. And this is also the 5-month high level in the FI long positions.
Well, thanks, Ansh, for taking us through that. Lots of indicators that reflect that we might hit yet another record high today. So let's see if that happens. And let's shift focus then. And defense, power and railways were the top themes of 2023. So among these packs, who are the top gainers and how do the valuations stack up against each other? Winnie is joining it with just that. Take it away, Winnie.
Absolutely. So there is no doubt that we've seen defense, railway and power really being the theme of 2023, especially in terms of when you look at the defense stocks that have come in as well. India evolved majorly in terms of the investments that were made in 2023 as well. So now let's look at some of the returns that we've gotten in terms of YTD also. We've seen Paras Defense, actually Hindustan Aeronautics, in terms of the returns, that has been the highest for Hindustan Aeronautics, followed by Bharat Dynamics, BEL, Solar Industries, MTAR Tech, as well as Paras Defense. And in terms of when you're looking at the PE also, HAL, after gaining the most in 2023 as well, still in terms of valuation for FY25, seems only at 30 times, which is much cheaper than something like a Paras Defense, which is trading at 70 times FY25 PE. So yes, gains have clearly been seen in the defense pack. All of them, valuations have seen an increase coming in as well. Paras Defense seems to be the most expensive as of now in the defense pack, but a theme for 2023 that we watched out for from the defense pack. Other than that, in terms of railway stocks, strong returns have come in from the railway stocks as well in 2023, whether you look at a Titagarh Rail or even in terms of Jupiter Wagons, then you look at something like a Texmaco Rail. All of these have seen very, very strong gains. Railway, Vikas Nigam, Mircon, as well as IRFC, all have been among the top gainers for the railway stocks. Running away in trade have been the railway stocks. And in terms of when you look at the valuations, let's put up the valuation charts for that as well. Titagarh Rail surely gained the most. Even the valuations for Titagarh Rail have been the highest as of now as well. So 43 times is what Titagarh Rail is trading at for FY25 PE. The lowest in terms of valuations is International, 15 times is what we're seeing. Lastly, in terms of power stocks, they have been charged up for FY23, I beg your pardon, 2023 as well. And all the power stocks, whether it's PFC, REC, CG Power, as well as Power Grid, let's pull up the charts for power stocks. They all have been flying away, running away in trade. PFC has gained as much as 245 times in terms of a YTD return when we compare as well. So that's the power stocks that we're talking about. REC also has been charged up in trade, and we're seeing strong gains coming in for REC as well. Valuation surely, PFC still 1.4 times, REC at 1.8 times, while in terms of CG Power, Power Grid, they're much higher, 63 times as well as 13 times respectively. So let's keep an eye out on all these stocks.
Well, absolutely, Winnie. So we'll definitely be keeping an eye on all of those counters. But it is that time of the year where we understand how the auto companies have performed. Will autos be in the fast lane or not this December? Srishti is joining in with the answer to that and what to pencil in terms of December auto sales. Srishti?
So the December month is expected to be a slow month for all these auto OEMs. Why so? Because from 16th of December, the Karmas period has actually started and it goes on to 15th of January. So in the Hindu religion, the buying is not preferred actually, and there are other factors at play wherein because it's the year end, from a couple of days now, we will be kickstarting the fresh new year. So the companies actually try to get rid of their older inventories. Production is actually on the lower side. The discounts have increased so that their older inventories get off the channel. So all these factors will be at play for the month of December. But other than that, if we talk about the segmental performance, then yet again the two-wheelers are expected to shine bright in this particular month. So the discounts are actually low on a YOY basis because post the festivity as well, the demand continues to be quite robust for all these companies is what we are gathering. Other than that, from the passenger vehicle sales, the demand is expected to be a bit moderated expected because it's quite a trend that we are seeing for the past couple of months now, and yet again a bit of a moderation is expected. From the commercial vehicle space, we will see a bit of a pickup on a sequential basis, that's on a month-on-month basis, but the key to note is that though MHCV sales could be quite steady, but it's the bus segment that is seen to be doing well. Companies like Ashok Leyland, Tata Motors, they have all announced that they have got fresh orders in the bus segment. And lastly, from the tractor division, because of the monsoon deficit, we are expecting a double-digit decline in the sales on a sequential basis. So the strongest among these segments could be the two-wheeler, but the weakest link could be the tractor sales this time around. Let's move forward and shift focus to the company-specific performance. So from the passenger vehicle space, we are expecting a bit of a single-digit decline for the likes of M&M Auto as well as Tata Motors. But for Maruti Suzuki, it could actually be a double-digit decline, where we are expecting an 18% decline on a month-on-month basis. Why so? Because the company's sales and the plant shutdown was also planned, and the companies has been increasing the discounts to get rid of their inventory. Other than that, from the commercial vehicle segment, like we highlighted, that on a month-on-month basis there could be an uptick. For Eicher Motors VECV, there could be a sales jump of 26%. For a Tata Motors commercial vehicle, it could be a flattish kind of a growth. Sales number expected to be close to 29,000 of units. But lastly, from Ashok Leyland, there could be a jump of 14% on a month-on-month basis. From the two-wheeler segment, all eyes will be on this, because for Hero MotoCorp we are expecting a bit of a moderation, but for Bajaj Auto on a YOY basis, if we see, then there could be a jump of 29%. Interesting to note that this time TVS Motor sales is not expected to be that great, because we are expecting a decline of 23% on a YOY basis. So this could be an exception, and we will be watching out for that. But lastly, from Eicher Motors Royal Enfield, a jump of 12% is what we are expecting. And lastly, from the tractor sales, like we highlighted, that a double-digit sales decline is expected. So we will be focusing on that. For M&M Tractor as well as the Scots, we are expecting a 21% decline on a month-on-month basis. So these are the expectations from the December auto sales data. Back to you.
Well, Shrishti, thanks so much for taking us through that. The auto counters will be in focus on the back of these estimates, but let's shift focus from autos to real estate, because real estate has been one sector that has hit it out of the park this year. Amid rising demand, the sector has built on solid gains. So what are the tailwinds for the sector, and will they sustain going ahead in 2024? My colleague Vamakshi is joining in with an analysis of that. Vamakshi, over to you.
Well, yes, Nifty Realty Index has not only shown resilience but has emerged as the star performer in the last 6 years. Nifty Realty Index is on track to post its highest returns in the last 6 years, with an impressive surge of approximately 79% this year alone. Now, to put this into perspective, it actually gained a remarkable 110% in in 2017, and this return that the company that Nifty Realty Index has posted is the second best in the index's history. Now let's take a closer look at the real estate landscape in 2023. Data from Anarock indicates that housing sales have actually hit a fresh peak, with the top 7 cities witnessing a phenomenal 31% yearly growth. MMR takes the lead, recording the highest sales of approximately 1.5 lakh units, followed closely by Pune with around 87,000 units. New unit launches in the top 7 cities collectively witnessed a supply of almost 4.5 lakh new units, a jump of almost 25% on a year-on-year basis. The major contributors to this surge were MMR, Hyderabad, Pune and Bengaluru, accounting for an impressive 83% of the total supply addition. Now, when we look at the city-wise distribution, housing prices have actually witnessed a robust increase, rising anywhere between 10% to 24% across the top 7 cities. This surge can be attributed to an increase in input cost and a robust demand. When we look at Hyderabad, it takes the lead with a remarkable 24% yearly jump in average residential prices. Interestingly, despite the strong housing supply, available inventory has actually seen a dip of almost 5% across the top 7 cities. NCR stands out, experiencing the highest decline of nearly 23% in unsold stock, dropping to around 94,800 units. This marks the first time since 2013 that NCR's unsold stock is less than 1 lakh units. When it comes to affordability, cities like Ahmedabad, Kolkata and Pune lead the way as the most affordable residential markets. Mumbai, although beyond the affordability threshold of almost 50%, has seen a 2% improvement. NCR has witnessed an improved Affordability Index strengthening from 29% in 2022 to 27% in 2023, a positive trend that could likely continue in FY25. Looking ahead to 2024, the real estate market is poised for continued growth. Despite an expected 8 to 10% appreciation in average prices across the top 7 cities, demand is projected to remain undeterred.
Well, absolutely. Thanks, Pamakshi, for that. With this, it's curtains down on this edition of Market Cafe from me, Shreyansi Singh, my co-anchor Snehi Shah, and the entire team that put this show together. Thank you so much for watching. The market takes the action forward for the last trading day of this year.